Hi everyone, I'm Paul and welcome to my review of Lesson 28 and 29 of ICT's 2022 Mentorship Program. Today's video is going to be a 2-for-1 because we're covering the trade that ICT made using SMT Divergence, which he covered across 2 separate videos in Lesson 28 and 29. We've only touched on SMT Divergence in a few videos over the course of the mentorship, so in today's video we're going to be going into a little bit more detail. But before we do, if you enjoyed today's video, it would be great if you could like it because that helps other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. These are quick, easy and free ways for you to support my channel. Lastly, if you'd like to hear more from me and join a community of like-minded traders, then make sure you check out the link in my description, which lets you subscribe to my free weekly newsletter and to join our Discord. Now that that's out of the way, let's jump into today's video. Today's video is lesson 28 and 29 of ICT's 2022 Mentorship Program. And our outline for today's video is we're primarily going to be talking about SMT Divergence, which is smart money technique. And the trade example we're going to be using is the ES and the NQ, particularly in the AM session just before lunch on the 16th of May 2022. But before we get into the trade example, we're just going to go through SMT Divergence in a little bit more detail. Conceptually, what makes SMT useful is it uses both intermarket relationships and correlation to assist us in our trading decisions. Remember, we covered in some of the previous lessons that assets and securities can either be positively correlated or negatively correlated. And a positive correlation means that those two assets or securities will move in the same direction. And a negative correlation is just the opposite, meaning that those assets or securities will move in the opposite direction to each other. And so some examples of this are the Aussie dollar and the Dixie, and they're negatively correlated. So when the Aussie dollar is going up, you'd expect that the Dixie is going down. And correlated assets, which we've used throughout the mentorship program and is what we're going to use in the example that we use to go through SMT today, is the ES and the NQ. So these are obviously intermarket relationships as well, and they're also correlated assets. And the reason why SMT is so powerful or so useful is because it highlights when there's been a breakdown in this relationship, meaning that we've got a break in the correlation between the two assets or the two securities that we're looking at. And critically, what SMT shows us is which of the pair is relatively weaker or stronger. So what this means is we can use SMT to start to build confluence and increase the probability of our trades. Now don't worry if that's still a little bit confusing. We're going to go through an example using the NASDAQ and the ES, which is what ICT covered in lesson 28 and 29. We're going to go through those now and just step through SMT Divergence, and I think by the end of it, it should all make sense. So we'll start now by looking at the NASDAQ, and we're looking at the 1-minute chart. And what you'll notice from this 1-minute chart is we have the NASDAQ basically painting a lower low. So you can see we have this swing low here and these lows here, and these lows here obviously lower than these, which means the NQ or the NASDAQ is making lower lows. Now in comparison, we can look at these lows here and you can see that the ES or the S&P is actually making higher lows. And the reason why this is important is this would suggest that the ES is actually accumulating long positions. And if we look at the ES and the NQ side by side, not only is this divergence very clear, so you can see we have the S&P on this side, so we have these higher lows, so you can see the angle of the line is pointing upwards, and then we have the lower lows on the NQ, and that's obviously pointing downwards, hence our SMT divergence. So what this tells us is that the ES is relatively stronger than the NQ, and because in this example we have a bearish bias, we'd be buying the ES over the NQ because it's relatively stronger than the NQ. So what we're going to do now is run through that trade example that ICT took in the lessons, and we're going to start with our top-down analysis and work all the way down to the actual executions themselves. So we're starting with the NASDAQ on the daily chart, and we're looking at determining our bias. Now we can see that the trend has been clearly bearish, so we can see we're making consecutive lower highs and lower lows. But what's actually happened here is we've swept this liquidity, so we have this sell side liquidity, relative equal lows down here. You can see we've reacted to that, the market's drawn backwards. And so even though the trend has been bearish, we now have a bullish bias because we're expecting price to reach into these relative equal highs, this buy side liquidity here. And we also have a volume imbalance just here as well. So we're expecting this to be quite a strong draw on liquidity, and we're expecting price to draw up into that level. So going into the session on the 16th, we actually have a bullish bias. Now, if we play this forward, you can see on the 16th, we do get the market reaching up towards those relative equal highs, but we don't quite reach them. And then it's not until that next day, so on the Tuesday, on the 17th, that we actually take out those relative equal highs there. But we're actually more interested in the price action on the 16th because we want to have a closer look at that SMT divergence in action between the NQ and the ES. So let's zoom now to our 15-minute chart. So looking at our 15-minute chart now, I'll just orientate us so we can, look into the price action in more detail. So we have our midnight open New York time over here, and you can see we have the midnight open stretched out this way. We have the 8:30 open here in red, and then obviously the 8:30 open stretched out there. And then we have our equities open at 9:30 just here. So you can see running into the 8:30 open, we get this move which takes out the buy side liquidity, and then the market aggressively sells off, taking out the sell side liquidity here, and then sweeping this sell side liquidity here. Now this brings us to the period just before lunch, so around 10 o'clock, and you can clearly see on these two candles here that this low is obviously higher than this low, so we can see this angle down here. So this is obviously a zoomed out view of that 1 minute chart that we looked at earlier in the video. Now if we compare this price action on the NQ to the ES, the divergence is quite clear. So switching over to the ES now on the 15-minute chart, we have the same piece of price action, so we can compare the two like for like. So we have our midnight, our 8:30 open. You can see we have a similar pattern where the market running into 8:30 has taken out that buy side liquidity. We've then had a sell-off which has taken out the sell side liquidity here and here. The difference being is after we've spiked down into that sell side liquidity, we've had a much more positive reaction on the ES, and hence that's given us this divergence. So you can see this low is actually lower than this one. So this is where that divergence again that we looked at on the 1 minute chart earlier in the video comes from. And so as a result of that divergence, we have a bullish bias going into this particular session. Whilst we're looking at the NASDAQ for a trade, we can see that it's the relatively weaker of the two pair. And because we're bullish, we want to be going long, we're going to be taking a trade on the ES because it's the relatively stronger of the pair. So to finish off the video, we'll just zoom into the 1 minute chart and look at the various opportunities we had on the ES to go long based on the SMT divergence that we've been talking about in today's video. So looking at our 1 minute chart for the ES now, we're going to have a look at the various opportunities that we would have had to go long based on our analysis in the video up to date. So if we have a look at the SMT divergence, you can see that quite clearly here. So you can see that this low is lower than these lows here. So that's that SMT divergence that we're looking at throughout the video. Now you can see as the market's traded up and down, and we've reacted to this level, and in the process you can see we've painted our fair value gap just here. So it's our 3 candle formation just here. I'll just draw that as a box so that's a bit clearer. We extend that across, and you can see that there was a number of opportunities to get set based off this particular setup. We can see that we got our break of structure just here, and this is that displacement that we're looking for, and you can see that this is the move that broke market structure just here. Another way we could have taken this particular setup is use the order block just here. So if we extend that out in time, you can see that as the market dipped back here just before it raced off towards the target that ICT was looking for at the buy side liquidity up here, you can see that just wicked down into that order block here before again racing upwards. So we get another big displacement as we react to that order block, and you can see that actually creates another fair value gap just here. This one's significantly smaller. I'll do that one in pink. even though I prefer it to be blue. And you can see again, we break structure just there. The market trades back into that fair value gap before then reacting to that again. And you can see we get a big displacement candle here. Now this becomes a breakaway gap. We don't fill that again. The market just races up towards the buy side liquidity, which is ICT's target in this example. You can see the only other opportunity to get set would have been this volume imbalance just here. You can see we get a little bit of a gap here, the market trades back into it, and that would have really been the last opportunity to get set as the market trades up towards that, 40.22 mark. So one of the last things that I think is worth mentioning, you can see after we get this period of consolidation here that the market takes off. And one of the things that ICT talks about a lot is that you get these down close candles in this overall bullish move acting as support, and you can see that that happens here. So we get these down close candles here, the market trades down, and then it takes off, and it just never trades back down below the highs of those down close candles. We get the same thing again here. We get a small down close candle, it acts as support again, we get another down close candle, and then the market trades higher. So that's just something that is worth keeping an eye on when you're doing your trading. You will see this all the time where, in a bullish move, the down close candles are acting as support, and then the opposite is true for a bearish move, is those up close candles will be acting as resistance. Thanks for watching my review of lesson 28 and 29 of ICT's 2022 mentorship. Today's video was a bit more of an exploration into ICT's SMT Divergence concept, and I know a lot of people out there have had questions about SMT Divergence, what it is and how to use it. So hopefully today's video answered some of those questions and helped you in your learning. If it did help you, it would be great if you could like it, because that's going to help other people to find it. And if you're enjoying this content and you'd like to see more of it, make sure you subscribe to my channel and turn on notifications so that you never miss an update. And remember, if you'd like to hear more from me and join a community of like-minded traders, then make sure you check out the link in the description, which allows you to subscribe to my free weekly newsletter and to join our Discord. Thanks for watching, and I hope to see you next time.